Habe ich. Es funkt. Dobrý den. Alle da? Anfangen? Kopfhörer, alles da? So, können wir anfangen? Auf Deutsch. Ja. So,
A very good morning, ladies and gentlemen. Welcome to the presentation of our half-year results 2018. Let me briefly inform you about this, and then, of course, we are ready to take all your questions. And in the meantime, hopefully the temperatures will cool down. As to the macroeconomic outlook, our region is well established. In all markets, we have above EU average growth, 3% or even more, strongly driven by domestic demand. Consumption is rising, but also exports are rising. And one result of this is a marked increase in wages, especially in Czechia, but also Romania and Hungary, far above the EU average, which is, of course, very nice for us. But the cost management, of course, is not that easy, because if we have more customers than staff, then we should have a positive result. And if you read up on this in our report, it's a fact that we have more customers than employees. So development is nice, and we're calling this convergence, and it won't stop, mind you. One of the reasons for the strong growth of wages in our region is that in many countries we have very low unemployment rates. In the Czech Republic, we have full employment, mind you. And it may be that Brexit has a positive effect on us, because some of the working people from Central and Eastern Europe will maybe go back to their homelands, and the wages are rising, and this will be a positive sign for their return. This is highly interesting. Look at this in detail. This doesn't come from us, but from the European Commission. It's slightly adapted by us, but this is the forecast for the public debt in our region compared to some EU countries. And as you can see, at this point in time, the dark blue is 2028. This is the forecast, the guidance, and then we have the figures for 2017 and 2018. So we are way below the public debt rate of most countries, with the exception of Austria, Czechia, 34%, Romania, 35%, Slovakia, around 50%, and there are Sweden and some other countries that are quite as low. But these are the best rates to be found in the Eurozone. And what you can see here is the guidance for 2028. You see that the Czech Republic, most probably, and there are many indicators for this, that this is the right forecast, is the country that has the lowest debt rate in Europe and will turn into the country with the lowest debt rate with strong economic growth and rising wages. So this is a very strong indication towards good convergence. We may expect that in 10 to 15 years from now, the Czech Republic will have a standard of living way above all other European countries. And what you can see here as well is that the strong countries over the next 10 years will improve, but the weak countries will not improve that much. Look at France, Spain, Portugal, and Italy. You see that there will be no dramatic change. They will have a very high public debt. With Austria, we assume that the debt ratio will go down to 55, but Croatia looks good. Germany, a dramatic improvement, Slovakia, and the good countries, as it were. Whereas Poland will not show too much movement, and the same goes for Hungary. There's a highly interesting study. We'll see whether it will turn out that way or not, but it tells us a lot about a national economy and how it can work well. We all hope for rising interest rates. The ECB announced that before the end of 2019, there will be no interest hikes. However, in Germany, 2% inflation. So if things go on that way, maybe the interest hike will take place earlier. But the official stand is that nothing will happen until 2019 in our region. Quite a lot is happening. The Czech Republic has increased the key interest rate and the benchmark rate, and the day after tomorrow there will be an additional increase, and in Hungary and Romania we also have slightly rising interest rates. Because of the inflation rate and the economic growth, this is the right step to take, and it's fully justified. So the net profit is quite good. We have increasing volumes in the loans, and we could improve our interest income, we could improve our commission and fee interest income, and we have introduced George in Austria, Czechia, and Slovakia, and it works very well there. Towards the end of the year, George will be marketed in Romania, and we do hope that this development will continue this year. Risk costs are very low and will continue to remain low, again, as a consequence of the low interest rates. Very often the question is asked, when will things change? The chief risk officer will tell us when and how it will change, but we may assume that this year the level will remain stable. And probably the hike in risk costs will be seen when the interest rates are rising. Philosophical question. We are here to take risks, of course, and if you have no risk costs, then do you really take risks? On the other hand, if you look at the loan growth, this is much stronger than many have expected also in our region. In other words, a very positive situation we find ourselves in, and we do actually need this because we will have to invest a lot, not only in expanding our digital platform, but also the requirements to our employees will be rising because competition is rising as well. It's becoming stiffer and stiffer. There will be more and more attackers on our markets with several products, digital products with very low costs. And our business model is based on the fact that in addition to good and attractive digital services, we also have excellent employees who advise our customers well. And this is where we have to invest a lot in the years to come in all countries. And this is why we need good revenue. And now on to Peter Ballsack. Or should I go on? Well, I've said everything. Here you see the deposits and the loans, almost 10 billion euros additional loans, 11 billion additional deposits, and Erste Bank Österreich, Sparkasse Czechia, Romania, Slovakia, Hungary, Croatia, and Romania. All these countries are growing. There is very positive atmosphere there, and a positive outlook for the rest of the year.
This positive atmosphere is also reflected on the retail sides. We have originated 4 billion retail loans. We have provided loans for more than 50,000 households. That would correspond to the size of a city like Klagenfurt or Budějovice in the Czech Republic, assuming that there are 2 people per household. As regards our income, customer deposits, we have gained almost 8 billion, considering it's remarkable considering the fact that we can't pay any interest. So we do have growth in customer deposits nevertheless. And a brief look at the insurance business may also be of interest for you. We have expanded our strategy. The premium volume is about the same as last year, but we focus on property insurance to a greater extent because it's our task not only to support our customers in building wealth and prosperity, but also in making sure that their wealth is preserved and protected. So in property insurance, we have seen an increase by 15% compared with the previous year. The fact that the premium volume has remained the same is due to the fact that single premium policies don't make much sense anymore in this interest landscape, and recurring premium policies are much more frequent now and make more sense. As regards digitalization, I think it's noteworthy that more than half of our customers already use our digital options. There is more and more demand for financial products that comes in digitally. 15% of our new consumer loans are sold digitally. Of course, it varies from country to country. The percentage is particularly high in Croatia, where over 40% of our consumer loans were sold digitally. So customer behavior, customer patterns are changing. They're moving from the desktop computer to our app. On average, we have 27,000 logins. So the average Austrian checks his or her George account 27 times a month. We have 2.6 million users in Austria, the Czech Republic, and Slovakia. In the autumn of this year, we will go live in Romania. Other countries will follow next year. We are the biggest pan-European banking group, and we have great plans for the future. With this, I hand over to Josef. Thank you, Peter. I've only prepared one page, but this does not mean that we're not satisfied with our results in our corporate business. On the contrary, we were able to take advantage of the positive economic development in the region, and on a full year basis, the volume of outstanding loans has been increased by 6.2%. In the segment which we've focused on in recent years, that is SMEs in particular, the growth rate was even 10%, and so the total loan volume is 51.2 billion. On this slide, you can see where the drivers of loan growth are. Slovakia, plus 21.5%, followed by Hungary, plus 16.7%, and the Czech Republic, plus 14.1%. In terms of products, this means that trade finance has grown most strongly, letters of credit, and so on. As regards the sectors of industry, the fastest growing sector is telecom companies and the media, automotive producers, and automotive subcontractors. Contractors are also very strong, as well as building materials and agriculture. What were the main drivers? I mentioned the general economic growth, but we outperformed the general economic growth, and in the SME segment alone, we won more than 1,300 new customers, thanks to an improved onboarding process and activities aimed at accelerating and simplifying the loan origination process. We believe, and so do our customers, that they need more input for their companies. They have invested in the expansion of existing production capacities and also new capacities. So we've seen more and more acquisition finance. So overall, we're satisfied with the first half of the year, and we are confident that we can gain even more in the second half. And with this, I hand over to our CFO. Thank you, Josef. Back to the business performance. Let's take a quick look at operating revenues and operating expenses. In the second quarter, net interest income came to 31 billion, plus 3.3% compared to the same period of the previous year. Net fee and commission income was even better, 5% above the previous year's level, and operating revenues altogether plus 2.5%. Here too, the second quarter was significantly better than the first one. As regards operating expenses, we are 3.6% above the level of the first half of 2017. Developments in the second quarter improved compared with the first quarter, but the growth rate declined compared with the first quarter. Operating result has taken a positive development in the first half of 2018 for the first time in 4 years. We saw an increase in our operating result. It's not a big increase, but nevertheless, it's positive for the group. And when you look at Erste Bank Austria, Czech Republic, Slovakia, Hungary, Croatia, most of the countries have performed well and taken a positive development. As regards savings banks, we saw a slight decline, but we do hope that there will be a more favorable development in the second half of the year. The essential message to be derived from the development of the operating result is that a year-long trend has been interrupted. We are now again seeing a positive development of the operating result, and we do hope that this is going to continue in the coming years. I hand over to Willi Czernko. About risk costs. Costs of risk, well, they don't worry me. Of course, again and again, people ask us, is that the new normal in the context of risk costs? My answer is that on a medium to long-term basis, we have to expect costs of risks up to 20 basis points. This is low by historical comparison. And as Andreas Streichel said at the beginning, we have an extremely positive economic development throughout the region, and this is expected to continue in the years to come. We also have an excellent labor market situation, which in turn stimulates private consumption and the ability of people to take out loans. So we have several factors alongside the interest rate level pointing to lower costs of risk also in the future. But there is a but. Regulatory developments in recent months have been aimed at curbing excessive loan growth. We do see excessive maturities. This is the manifestation of a kind of competition we would rather not have. And for our bank, we think we have learned our lessons. We're not going to be tempted by that. The same happens in the field of real estate financing, because there as well, people's own capital contribution should not be neglected. There are two ratios, LTV, loan to value, which says that a certain amount of debt should not be exceeded. 80 to 90% debt is an absolute limit. On the other hand, a 10 to 20% own capital should be taken as an absolute prerequisite. We don't like to see 100% debt financing in the market. We do see that, but we don't like that. Coming back to our own portfolio, we can see that the quality of the portfolio has improved. The major positions which kept us busy last year have been closed. So as regards the costs of risk, we expect a good contribution to the result of the full year. When you look at non-performing loans, we've reached a value of 3.6% as a ratio, the percentage of total exposure, and I think I'm not promising too much when I say that the value should go down further by the end of the year. The coverage ratios are excellent, so we find ourselves in a very comfortable position, and we look to the future with optimism. And now I think it's Andreas' turn again. Equity. Our equity has taken a positive development, a slight decline in the first half of this year. This is mainly due to foreign exchange effects and also to the fact that we've bought out the big minorities in BCR. The transaction is going to be closed in the second half of the year, but it was booked already in the first half, and the ratio will be, the equity ratio will be 13 point something. We don't know what's coming after the comma, but there will be a 13 in front. Our outlook is stable. We still expect average growth in our region of 3 to 4%. There is not going to be any major change in the structure of growth, perhaps more exports and less consumption. For 2018, we expect a return on tangible equity of more than 10%. In fact, we are above 10% already, though, so this is not a particularly aggressive forecast. You may want to play around with the plus. You can make it bigger and even bigger, so you can use your imagination there. Moreover, we take it that our revenues will increase slightly in 2018, and we expect our costs and our costs of risk to remain at the current level. So, what are the risk factors that are conceivable? Interest rate developments, if anything happens, and that would primarily concern the euro area, that would be a positive risk factor. But apart from that, according to our assessment of the situation, there are two main risks. One is ourselves not performing well, and the other risk is others not performing well or not doing the right thing. And as long as that does not happen, we take it that 2018 is going to be a good year. That was all from my part, and now you're welcome to put questions.
Eine Frage an den Herrn Sikela.
Mr. Sikela, concerning the credit growth in Hungary, does this concern only the main corporate business and the suppliers, or are there other sectors as well? It's mainly the SMEs, the strong growth signals that we will reach a lower basis, but primarily it's the SMEs. And we expect that the growth and the positive economic trends will continue in the next 5 years. But it doesn't mean that we will not do any corporate business there. We have good big names that we could attract. Well, as I've said, the granularity concerning Hungary, I cannot supply you with data on this, but we can have a look at it together to be sure. As concerns commodities and agriculture, Hungary is very strong there. And if you look at one of the largest transactions over the past years, the acquisition of the Czech PPF group, which we played an instrumental part in, where we extended a loan of 3 billion loan. Well, this is a takeover of the telecoms of the Norwegian Telenor, of which Hungary is part. And this financing, of course, did have an impact on the industry as well, and on our portfolio, that is to say telecommunications and media. Two questions. One concerns George and the role that this will play in the future expansion. Mr. Treichel, you have mentioned time and again that you also want to expand regionally with George once the rollout is finished. Have these plans matured? Have you any new regions in mind? And how are you going to do this, with a non-banking license, or will you cooperate with another bank as a pure software project? That was my first question. Well, what is most important for us is the rollout of George in our region. We do not want to tap a new country before our region works well and everything functions according to plan, because otherwise we would really be punished for that. So Hungary, Croatia, and Serbia are next to go. But we're working on this. Our preferred region is that our preferred project is that we have an own license and do it all ourselves. And we combine this with setting up an infrastructure in our group that could challenge our existing infrastructure. Which market that will be, this is under discussion at the moment, being discussed intensively. Peter Ballsack and I are of the same opinion here. Not all have the same opinion, but Peter Ballsack and I do. And maybe we will hold our own in the end, and then we'll tell you once we've reached a result. Could you tell us whether it's north, south, east, or west? It's in Europe. You said we want to challenge our own infrastructure. Can't imagine what this means. Peter Brabeck should talk about this, actually. But what I can tell you is we have an existing IT infrastructure at the moment. And together with George, we could set up a bank in the box, which need not be in the country where we become operative with George, and could use this in order to challenge our own system, our in-house system. Similar with George, we said we'll develop this ourselves, and then in-house, we could actually set up a competitor, and our systems and components could be replaced by new systems. Credit growth. Mr. Chenko, you said that you are also worried that things will overheat, but at the same time you want to grow by 5%, which is quite a large sum. So how are you going to combine this? But this is not a contradiction as such, because our standards are as such that it all fits into our ideas. Maximum low adjustments will be necessary. But in all, this is a framework in which we feel at home.
Hungarian newspaper, Magyar Idők. I have a couple of questions for you, some pragmatic, some less so. In terms of rising interest rates, what are your tolerance benchmarks at this point for a potential increase in your NPL ratio, especially considering how substantial amounts you have sold off in portfolios in the past years? In terms of the Hungarian market, I'd like to know what are the causes of the delays in rolling out George mobile payment that, if I remember correctly, was scheduled to be done by the end of 2018, and it's not on the immediate agenda at this point. And Hungarian Prime Minister Viktor Orbán reiterated that Central Europe will become the powerhouse of economic growth and political strength in Central Europe, your core markets. so what you touched upon isn't just a momentary picture, but an actual shift in the workings of the world. I'd like to know, Herr Treichel, whether you agree with that statement and whether that is impacting Erste's long-term business policies. Thanks.
Okay. So you fangst du an mit
NPLs or interest rates? Yeah.
Interest rates and MPLs, I think, as shown, interest rates and especially MPLs are already, let's say, significantly down. Any portfolio sale is not envisaged for the time being, so it's work in progress, further improvements, fine-tuning at all.
Yeah, maybe I can give you answer to George. Yeah, you are completely right that we wanted to deliver George to Hungary end of 2018. But given the fact that George is not the only one IT project we have in this group, we will be able to roll out George to Hungary 2019. I mean, a lot of IT resources were related to the acquiring of the Citibank portfolio, as you know, which went quite well and where we are super happy that we got this opportunity.
Okay, with regards to your last question, I do not believe at this point in time that you can actually talk about Central and Eastern Europe in the sense that it is a synonymous for an economic zone. You can also not talk about Western Europe anymore because the economic situation in Spain is very different from Denmark, and the economic situation in Greece is very different from Sweden. And the same is the case in Central and Eastern Europe. The countries are all doing relatively well, but with very, very different connotations. So you cannot say that sort of we would be very happy if you could say that sort of that the future is bright for Central and Eastern Europe. It looks pretty good, but things will change. We will have convergence. We have a couple of developments in Central and Eastern Europe that are not very positive, which is the fact that due to the wage differential, a lot of people have left. Population is not growing. There you also see completely different trends in different countries. We need to reverse that trend. And I think that unless something political happens that could make sure that you have basically a parallel development in Central and Eastern Europe, which would necessitate that all countries from Poland down to Bulgaria create some form of legislative and economic union that could align the speed of development in all countries. But that I don't see coming. So I think you will see very different performances of the different countries. All in all, however, I think you can say for the region from the Baltics down to the Black Sea, that this will probably, unless things change very much, this region in total will, with very different performances in the different countries, outgrow the rest of Europe dramatically for the next 15 to 20 years. There are a lot of reasons for that that would turn this into a political conversation. So let's stay at that.
Ja, hätten noch Zeit für weitere Fragen. Frau Graber, bitte.
Any further questions?
Ich wollte nur kurz fragen.
A brief question about the savings banks. What's your explanation for the development there? And what do you intend to do about the Austrian savings banks? Now, which development are you referring to? The cost situation. Well, it differs from savings bank to savings bank. If there were an overall recipe to be applied, we would have solved the problem already. There are small savings banks that are doing a very good job, very efficient. Others are not. And the same holds for big savings banks. There are those that are efficient and others that are not. It's really a question of coordination and awareness building. Savings banks are not exposed to shareholder pressure. They don't pay out dividends, and they should be aware of the fact that they are forced to be efficient as we are, because we have to build equity in order to be competitive in the future. I think the changes to be expected in the banking sector mean that as savings banks, we have to make sure that we can create value for our customers. Digitalization is a fact. It's not something that is within our control. In 10 to 15 years, most people will deal with their financial transactions without going to a branch or without talking to an account manager. So our account managers have to be good enough to create value for our customers, and this is not something we can do overnight. It takes a lot of money. Of course, we want to remain a group together with the savings banks, and we have to develop along the same lines, and this is what we are doing. It's not, it wouldn't be right to say that we're the good ones and the savings banks are the evil ones. There are many things the savings banks do better than we do. Not much better, but better nevertheless. Sorry, there is no microphone. We can't hear the speaker. The speaker's microphone is not on.
Was haben Sie für Ziele?
Now, what are your targets for the year end in terms of cost-income ratio? And what is your longer-term target for the cost-income ratio? Well, let me put this in perspective. In the second quarter, our cost-income ratio improved significantly. We're way below 60% now. In fact, we're at 58%. Our medium-term target is 55%. Now, I can't tell you when we're going to reach that. It should be achievable in a period of less than 3 years. Is that going to be enough in the long term? Now, I doubt it. And I think that we will, as a group, at one point in time, have a cost-income ratio of 50 or even below 50 because of competitive pressure and because of the need to be able to generate capital. But I think we're well on track. And we do hope that earnings will increase. Personnel costs per capita will increase rather than decrease in the region. We can't do anything against that, and we don't want to do anything against that. We want our Czech customers to have more money at their disposal in 10 years than they have now. This goes for our clients and also for our employees. So we have to work on our infrastructure and on things which I mentioned earlier. This is where we can cut costs. Mr. Chanko, you spoke about consumer loans, and you said that things have got out of control in terms of consumer loans. Could you specify that? What do you mean when you talk about a problem relative to other markets? Because the regulator always tells us that consumer loans are a problem, but it's a minor problem. Now, let me tell you one thing. It doesn't apply to us, but when I look around, I can see banks that are originating consumer loans for maturities of more than 10 years, and this is something we won't do. And I fully understand that the regulator wants to have clear rules of the game. Those are signals which we saw before 28. Now, what do you mean by consumer loan? Anything except real estate and cars? Yes, basically. But let me give you a simple example. A flat TV screen, taking out a loan for that for 10 years doesn't make sense, because the technology will be a different one in 2 years from now. This is an exaggerated example, of course, but it tells you what I mean. Which markets are you referring to? Austria? Austria as well. And elsewhere? Yes, elsewhere. But you don't want to specify. Well, the markets we operate in. But is there any market where the problem is more pronounced than elsewhere? Now, we can see that in the Czech Republic, the regulator has started to adjust the rules of the game, same in Slovakia and Romania. We can see such developments everywhere because the regulator wants to curb this excessive development. No one is against growth in a high single-digit range, but there are exaggerated elements, excessive elements, and it's up to the regulator to adjust the rules of the game. Are the rules of the game too relaxed? Well, in a bank branch, you can't put up a poster saying 0 interest on your consumer loan. But in a supermarket, things like that can be done. Well, we want to be prudent. We want to take a prudent approach. We know what it means to get through a year with favorable costs of risk, and this supports us in our effort to create added value. Mr. Treichel said that the CEE region is going to grow. The same was said in 2007, just before the financial crisis, when everything collapsed. Do you think this development could be stopped again, that you could be stopped again on your growth course? Well, you should never believe that things are going to stay as good as they are. A lot happened during the past 10 years. The financing structure in Central and Eastern Europe is quite different now. The liquidity situation is different. Remember 2005 and 2006, we had double-digit loan growth, including FX loans, because in some countries there was not enough local liquidity. We had loan-to-deposit ratios in countries with a poor liquidity situation of 200, 250, 300. So there's been a drastic change, not only in our bank, but in the entire banking sector in these countries. Government finance and the situation of banks, the financing situation, the national banks, the regulators, everything has improved drastically over the past 10 years. Regulators tend to intervene much earlier. We are close to 10% loan growth, and the alarm is going off on the part of the regulator because they want lower income-to-debt ratios. So the situation has changed considerably. But you are never immune to a crisis. And if a crisis were to erupt again, the financial system and the government system is much better prepared for that than they were in 2007. Well, the trend, a question about real estate finance. Where would you said you would define the limit at 80%, 90% debt. Do you think the situation is overheating there in commercial real estate, private real estate? Has the regulator reacted to this development? And has it reacted sufficiently? Of course, the regulator has started to react, and they are demanding a higher percentage of own capital, minimum 10%. 20% is preferable. 80% LTV is still acceptable, but apart from that, or going beyond that, there should only be a small percentage at a bank. So own capital there has to be more own capital on the part of people buying real estate. The maturities have to be reduced, no longer 40 years. They should be brought down to 30 years or less. And I think we can only commend the regulator for this early interaction. It's not one against the other. It's to do with the fact that the regulator is trying to exercise a controlling function. It's a positive thing because we don't want to be in for a surprise. And are there differences between the individual markets? Yes, but generally we observe this development in all our markets. No more questions? Any question about our second pillar, catering? Iki, Al Banco, George Cafe? No questions about that. So thank you very much for attending our press conference. The next presentation, hopefully again with good news, will be on the 2nd of November, but not in this building, in London instead. You're cordially invited to join us there. So I wish you a pleasant summer. Thank you for your interest in Erste Group.